Okay, let's continue from where we left in the first session. So we are still on DXY and we are trying to understand the trend, or we are trying to establish who is in domination. So from where we left in the first session, we can see that price is already inside of premium zone. So inside the premium zone, we are getting a reaction, and we want to understand from this reaction where I'm shading now. We want to understand, is there any bearish um, domination here? Is there a reason to believe that the sellers are in control inside this um, premium zone? So we started from looking at the monthly time frame, and we came to the weekly time frame, and now we are on daily time frame. Okay, so we have been able to identify that the market made this high point, then but prior to making that high point or higher high, we had an a previous lower high somewhere here before price made the move to the top. So once we can see that this lower high, and in fact, there is also another lower high here. So the point is we want to see all those lower highs being taken out. But the important external lower high is this place. And we saw this from the monthly, weekly time frame. Okay, so until this place is taken out, we will not say we have an external change of direction or break of structure yet. So what we are trying to understand here is just all internal. Okay, internal break of structure or change of character. That's what we are trying to find. So we can see market has been able to take out this low, take out this low, and these lows are enough to tell us that internally within this present area of interest or area of trading or session, we can see that the market is trying to give us bearish structures. Okay. And the most important thing is also that after taking these lows, this low, we can see the market made a pullback up, but it has failed to swing. Okay. It has failed to make a new higher high. Okay, it has just failed to make a new higher high. This means that we are having a failure swing. Okay, so this means that we should be good. Okay, so we have a high point, then we have a lower high somewhere here. We should have a higher high, but it looks like we are having a um a lower high, another lower high. Okay, and that is not the characteristics of a bullish market. So which means there is a higher chance that this market is trying to change from bullish to bearish. So we have to monitor for more bearish structures. We can also see that this previous low that the market make here, this previous low point the market made here, we can see that from that failure swing, price has dropped down to crash or take this area out. Okay, has taken it out, which means it seems like we are seeing a second break of structure. Okay, we are seeing a second break of structure. Okay, so what we are seeing is this. We are getting something like from the top, we are getting something like a low, lower high. Then we got a lower low and a small pullback, lower high. Then we are getting another lower low, and we are getting this looks like an equal lows. Then this looks like an equal low. Okay, so let's say we have this up to here. Okay, this is what we have for now. Okay, so if I pull this down here, what do you see? We see a low, lower high, lower low, lower high, lower low, and then a lower high. So the expectation, if this is going to continue as a bearish trend, the expectation is that we should have a lower low. Okay. And where should the target be? Because if this bearish internal bearish trend is really strong, going to be strong, then we we are it's supposed to target the external low. Okay, if it gets here and it does not take this external low out, then the market is likely to return back and continue to go up. But if it gets here and it crashes it, then the pullback should also fail so that the market could now go down more. Is what I'm saying, is it clear? Is what I'm saying, is it clear?
Yes, it's clear.
Yeah.
Because if it doesn't take this external low out, if the external low is not taken out, the market, though we have a bearish structures, but we have bearish structures forming here. If this external area low is not taken out, there is no way it will keep selling. It will want to go up and continue the bullish market. Okay, so this is so if price is going to come down or is going to continue the bearish structure, the target should be here. Okay, so the target for this should be here before we get a pullback up. Okay, before we get a pullback, a pull up. So let's see now that we know that internally we are getting a bearish break of structure, and the place where it will target will be the external low here. We have a direction that we think the market might be going based on this bearish structures. Okay, so we have a place that we think the market could want to reach out to. So let's see how it's going to do that. But let's also observe from here. Okay, from so this is the most important lower high, and from there, this is the most important. This was the most important lower low. From that point, this point here, the market came down and stopped here before it made some kind of a bigger pullback up to here, up to here. Okay, so we have this range from here to here. Now let's check that from, so you must take your time. The pair that you want to master, you must take your time to understand all the structures. Study it like this. Okay, study it like this from the higher time frame to the lower time. You must, because you are trading or um, trading with smart people who have the knowledge, and they understand what is happening. So you cannot be trading based on just guesswork. No, you need to spend time to really study the thing, the structure of the market, because the structure is the basic principle that cannot fail. The market will always respect structure, and especially to respect the structure on the higher time frame. Okay, so we get a low, we get a lower low, lower high, lower low, lower high, lower low. What kind of market is this?
Downtrend.
Good. So who is in domination?
Sellers.
Sellers. So lower low, lower high. Then this the last, that's low, lower low. This is a lower high because it has not been able to take this out.
Bluetooth.
Then
Bluetooth connected.
we are getting an equal low, and we are
Mm-hmm.
still getting an
Equal high.
equal lower high. Okay, so are we still bearish based on this or not?
Yes, bearish.
I will say we are still bearish. Why? Because this is the most important, this is the last reference lower high, and price
Mm-hmm.
has not been able to take that out yet.
Mm-hmm.
So this is the reason why we are still bearish. But the moment price
Bluetooth
moves up
connected.
and take that out, you cannot still say we are bearish, because within these internal structures here, this low, high, lower high has been broken. So the market has the right, okay, to reach out to any level it wants to get to before it gets to the top here again. Anywhere it wants to get to, it can move up and get to before it gets to the top here again. But the good news is that this high has not been taken out. Okay, which means we are still trading inside this high and this low
Play by EF card.
and this low. Are you all watching? Are you all getting me?
Yes, sir.
Please kindly mute your
SN
mic
mode.
if there is noise at your side.
Bluetooth mode.
Uh, Good. So this is where we are right now. So now we see the trend is bearish and the trend has not changed yet, even based on the current move. So with that, and we have also established that the market might want to be reaching out to the external low here. Okay. So, and we are still bearish. With all this um, established, it means that it will make sense if we want to trade this pair to trade with the trend. To trade with what? The trend. Okay. So, which means we should also be looking to sell the dollar index or the DXY. Okay. So, if that is the case, let's now analyze from this recent point to the low, this area, and see if we can find reason to sell. Okay, if we can find
Mm-hmm.
a reason to sell. So now we are going to focus on only this area, and see if we can find any reason to sell. So now we've been able to establish the first step. What is the first step? The first step is to be able to identify or establish who is in domination. And we've seen that though the market was bullish before, okay, it is inside the premium zone. And inside that premium zone, we can see that the sellers are looking to be in charge. Okay. So with that in mind, we can say that the sellers are in domination. But the overall trend based on the monthly time frame is also bearish. Okay. So the monthly time frame is telling us the market is bearish. The weekly time frame was bullish, but it looks like it has also changed to being bearish, or it is still in the process of changing to be bearish, which means we would want to go with what? The bearish market. And we can see if we are using these structures alone, the daily time frame is also showing a bearish market. Okay. And this is happening from a premium zone. Okay, a premium zone. Good. So for us to trade, we have to focus on the most current information, which is this high and these lows inside this range. What is happening? Now, let's define our area of interest. If we are going to use this area to trade, where do you think will be our area of interest? And what should we be looking at for at the area of interest? One, we want to be looking at any point that there has been reactions. What is reaction? Reaction means, let's say the market is going up, it get to a certain point, and now it start going down. It means at that point there was a reaction. Let's say the market was going down, it get to a certain point, and now it start going up from there. That means there has been a reaction. So if you look at this current place here, where do you see as the market giving reactions? Okay, where? Okay, so look closely to the shaded area where I've put this rectangle. Okay, look there. So let's do a little bit of exercise. Now, we are trying to find area of what? Interest. When the market was up here and it started coming down, when it got to exactly this place,
Let's balance the bill first.
tell me what happened. What do you see happen? From up here, when it got to this area, what happened?
There were reactions.
There was a reaction. What kind of a reaction?
The preventing from selling.
Yes.
Buyers are there.
The buyer steps in.
Yeah, there was a this area prevented the sellers from continuing to be pushing price down, which means buyers stepped into the market from this point. Do you all understand this? Because we have to make it simple. Buyers came here. That is the reason why the market got here and it moved up. Okay, and I mean, you can find a lot of points on the market where there are reactions, but you need to find the most important or the most valid point. Okay, and those are the areas that you call your area of interest. Okay, so here I can see that the market got here and it pushed up. Okay, now look at the kind of push up. The push up was very significant. Significant in the sense that the push up was
Oh, God of mercy.
big. Okay, the market pushed up real big. Now, how do we know that buyers will still continue to be at this level? How do we know that? Okay, or how are we going to be sure that buyers are here? First, market gets here and there was a reaction up. But how
By
do we know
TF
that?
card.
How do we know that it is
FM mode.
buyers are here?
Bluetooth mode.
How are we going to know that it is true buyers are there? Okay. Now, we will know only when market comes back there again. And we observe what is going to happen. So when the market came back to the same place, the buyers stepped in again and they still push the market what? Up. Are you all watching? Are you guys seeing what I'm saying?
Yes.
Yeah.
Good, perfect.
Yes, sir. Yes, sir.
So this thing happening twice, one, buyer stepping, two, buyer stepping, means that this place is looking like a significant point, okay, which we have to pay attention. At least you get two attempts, two times where buyers step in the market and they push the price up big. It means this place is significant. Okay, Guys, give me a second.
Yeah, then about say, me Sunday go. Hey, na me kase me tom pese me tom for Bama join. Pese me say dia sika wo card ne so.
Oh, my main check here. Nempabwani is saying.
Me pay about pay $14.
Na nneɛma a wotɔ nyinaa yɛ saying.
Oh, me a dye pape and a cabbage.
Obetumi ayi so up to maybe $50. Sɛ ne nyinaa bɛso a, why? 50, 60. Sɛ ɛbɛso mpaboa no na diapers ne yɛ saying.
20. That's what that for me is $29, $20.
Nti obetumi ayi so bi $60 koraa. Anaa nso ne mpaboa no.
Take up on the make me about question.
Okay. I mean, we're very close to something. Okay. Yeah, hello. Guys, sorry. I had to pick up the call I got. Are you all with me? Are you with me?
Yeah.
Okay, good.
Yes.
Sorry about that. I wanted to mute, but I couldn't do. It's okay. So we still have buyers sitting here. Now, then the market goes up again, and then it comes down, but this time, watch carefully. Watch carefully. I'm not saying because buyers are here, it means sellers cannot still push the market to go below the buyers. Okay, so you have to understand what I'm saying. Buyers are here, but the market or sellers could push the market to go below them. Okay, so that you won't put it in your mind that the moment you see that there is 2 3 touches at a level, you always want to be buying from there. Okay, this means you are trading support, resist support alone. That is good, but support alone will not work always. Okay, so the market um, pushes down and it gives us a body or bearish body close. This bearish body close here is what we want to see. Okay, me, Kelvin, I want to see that buyers are here. Good. But I want to see that sellers will be able to crash the buyers. Okay, once I see that, I will be happy. Why will I be happy? I'll be happy because I will know that in the near future, it's this activity here is going to communicate to me that in the near future, the market is trying to tell us that sellers could bypass the buyers who are sitting here and then be take control below the buyers. Okay, so buyers are sitting here, all right, but the sellers being able to push the market to go below the buyers is a sign, is an indication, is an initiative, okay, is an intention being revealed that in the future, sellers will be in charge from below the buyers. So what I will do is I will put sellers here. Good. So based on this thing that just happened here, this body, look at the bearish body close. The bearish body close here, based on what just happened here, it means that sellers are likely to take charge below the buyers. But watch carefully. The moment you see the market now goes up and it stays above the same level, it tells you that the buyers will want to be in charge again. When you are seeing a level behaving like this, this level tends to become stronger. Why stronger? It means that this same level can be used as support and the same level can be used as what? Resistance. Buyers can have energy here, sellers can have energy at the same point or the same level. So what I would do is, if I want to be trading this market on the third touch, and on the third touch, I see that the sellers were able to push the market below the level, I will wait. The moment I see the market now pull back and it goes here and it stays above the level, I will jump on the buy. Why? Because anything above this level is for buyers, anything below the level is for sellers. Does this sound something that you can understand? Tell me yes if you can.
Yes.
Perfect.
Yes, sir.
We want to make it very simple.
Thank
Yes,
you,
sir.
sir.
Good. Now, in the market now goes up. Let's watch. So all you have to be doing is to be paying attention to that same level all the time. The market goes up, allow
Good work.
what it wants to do. The moment it comes back to it, as long
Moment
as
of
it
earpiece.
touches that level,
Breaking.
as long as it touches that level and it stays above the level, it stays above the level. This is your buy, okay? Because above this level is buys, below it, sellers will be in charge. Are you all seeing that? Now, the market goes up again. In the next future, it comes back to the same place. Then it breaks it a little bit, go up, consolidate around it. The moment the market pushes it and it stays above it, is buyers take charge again. Now, all of you should tell me, what do you think will happen if the market comes back and now it continually stays below this level? What do you guys think will happen?
Sellers will be in control.
Perfect.
What network is this?
So in the future, the market now goes up. In the future, it comes down to the same place again. And watch this. You see, from this area, it moved impulsive. This is what I'm talking about. Initiative. Okay. An impulsive momentum move. The market moves and closes below this area. This is a clear indication that sellers have now been able to crash the buyers. They were able to crash the buyers here, but that wasn't enough. Okay, they tried to crash them a little bit by price coming below them here. That still wasn't enough. But here, it looks as if they've been able to push the market more down below the buyers. From here, if I am monitoring this market based on this level of interest, the I will say that the sellers now mean business. So the moment this indication comes in, the market pulls back up again, and it goes up to retest this level. But watch, after retesting the level, it faked or made it look as if it was going to buy again, go above the level and buy. Yes, it went above the level, but it came down again and it is now staying below the level. So the key word is, as long as the market stays below this level, sellers are going to be in charge. This is it. As long as the market stays below this level, sellers are going to be in charge. The moment the market now goes up and go and stay above this level, buyers are likely going to take over again and continue pushing the market up. Do we all get it now? Perfect. So from this, we have been able to identify an area of interest which is being used as both support and resistance. So if we add all this back to the trend that we've already established, we can now be sure to say that it makes sense for us to be looking for sales. It makes sense for us to be doing what? Looking for sales. As long as the market remains bearish and the market remains bearish, as long as the market remains bearish and the market stays below where the sellers are in control. Now, the other thing we mentioned about the area of interest, we said that um, if we get to the entry confirmation, we said we should see something like rejections. So let's move to, and we should also see if this is a bearish market, so we should see something like evening star. Okay, so let's say from this low here, a high point here, the market makes a low, and then now the market has been buying. So at this level, we must see an evening star. Okay, the market is below our area of interest, but we must see an evening star. Now we are bullish from here. Why are we bullish from here? We are bullish because we can see a higher high, a lower high. A higher high, price comes down, it doesn't take the low out, double bottom. Then we see an equal kind of high. Price drops down, a failure swing, equal high again, drops to take down this low, retested a little bit, break of structure, and is trying to pull back. Okay, this is what we are seeing. But initially, the market was buying. So if the market is bullish inside this range, this area, we might want to see an evening star before we step to sell. Without an evening star formation, we cannot sell. This is part of the entry confirmation. We need evening star. Look for either morning star or evening star pattern. Okay, so what is evening star? We want to see, all of you, please watch here. Watch this, please. We want to see a big bullish candle, a small one or a doji, and an engulfing bearish candle. This pattern is what we call evening star. Once you see this and the market is below the level where sellers should be in charge and the overall trend looks like it is bearish, what are you waiting for? Are you all getting my point? What are you waiting for? You must now start to look for sales. Okay, so let's say those who jump in, who saw this candle close and they jump in early from somewhere here, from the close of this candle, they will be able to make money back to here. They made this move. Okay, now we are not just thinking about taking the trade to here. Remember, our prediction from the higher time frame is so that the market will drop to the area where it could now give us an external break of structure. That was our original anticipation. Okay, so the market getting here and coming back up to entry again doesn't mean that we are done. We are not done. Still, the market hasn't broken structure and the market hasn't moved above where buyers would take charge. So we are still good to be looking for sales. Am I right or not? We are still good. Okay. Now, the market pushes and comes back. So why did the market push to come up? I cannot give you the reason why, but what I can tell you is that there were already buyers sitting here. there were buyers sitting here, okay? Because previously we've seen price move up from here. So it makes sense that when the market came back and got here again, it makes sense the buyers stepped into the market again. Okay, which means for us to be able to go down to where we are expecting the market to go down, sellers must crash these buyers here with a big momentum body close. If that does not happen, there is not any way we can go down, which means the market should get here and it should crash the buyers. Okay, so our immediate TP, if we are going to be selling from somewhere here, our immediate TP should be here, just here again, where the buyers are. If it gets here, there will definitely be a reaction up. But as long as it will return back and stay below here, sellers will keep taking charge. Are you guys getting my point? Let me show you the last thing about the entry confirmation. Now, buyers move the price up. We've already seen evening star. Buyers move the market up again. When the market now went up, this same place where sellers came into the market, the moment the price got here, we can now see a reaction. Sellers push it down. It gets here again, sellers push it down. Okay, so the moment you see something like, and let's study what the candles, we want to look for what? Evening star. Okay, evening star, you need a big bullish candle, a small doji, and an engulfing bearish candle. Do we have it here or not? We have it. This is the time where you should sell. Okay, but where do you want to be seeing this? You want to see this at an area where sellers have reacted in the past. Okay, you want to see it at the same point. If you don't see it at the same point, it might fail. Okay, so we got it. We get a small sell. Now price come back again. Now we see a big bullish candle, 1, 2, 3 dojis. Then we see a bearish engulfing. This is also a morning star formation. Once we see it print, the market from here, boom, 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 sells. The other thing is that this looks like a double top. I told you before the market does any reversal, market has been buying. Before it reverses from the buying to tend to sell, it will give you either a head and a shoulder or double top. So you are seeing all the confirmation requirements. Okay, everything tells you that this market should sell. The last thing I want to show you is from down here. Let me go to 4 hour. Okay, daily time frame is still fine. From down here, I want to be looking for head and a shoulder pattern. So I want to find a higher high, which is a double top, neckline hit, double top, and I want to see a right shoulder form. We have a small right shoulder here. Okay, this is a head and a shoulder pattern. Once you see this in your area of interest with evening stars, you don't joke about the trade. This is the entry confirmation. Okay, let me go to the 4 hour from this daily time frame. So now I start scaling to the lower time frames. 4 hour. Okay, I have a high. I have a higher highs. I have price drops